Citizen, good morning. You are mute.
Yes.
Ah.
Good morning. Good morning, Rose madam. Thagarji, how are you?
Good morning, sir. I am good. How are you?
Good, very good. Babita, good morning.
Good morning, sir. Good morning, sir. Good morning, ma'am. How are you?
Bus, all are fine. And you can see many of the experts are there and we are waiting for Mr. Bimal Jain and Mr. Mani and then, of course, Mr. Rajat Bose. Yes. Let us coordinate with that is
Babita, someone from the attendee has raised their hand. I don't know what that Subodh K is. Maybe some query he has.
Has he mentioned something in chat or not?
Let us wait for 2 minutes and then we start the webinar. Thank you. Yes, Bhavita madam, you can start it and then we can go one by one.
I think Bimal Jain sir has already joined.
Yes, he is joining. He is joining, so don't worry.
No, he has joined. He has joined.
He's joined. Okay, we cannot see his photo, that is why. Yes, please.
Good morning. Good morning, everyone. And formal welcome to all the participants, all dignitaries here in the panel. And this is a very important webinar that we are having today. This is the implication of taxation in general insurance industry. I think this is something that we all should do the brainstorming and find out what is the policies and how these can be sorted out and how these can be easy for the general insurance industry. So today we'll be talking about why comments on taxation of general insurance and India and other countries, GST implications while underwriting or settling of claims in general insurance business, property, marine vehicles, GST implication on settlement of claims, input tax credit at the time of underwriting and settlement of claims, interpretation of GST for payment of remunerations, rewards, gifts, then implication of GST under reinsurance, then importance should be given to the GST accounting and compliances. All these important topics we are going to discuss today with all the dignitaries here in the panel. And I will now request our co-chair, Mr. S.K. Sethi ji, to start this webinar and give his opening remarks, sir.
Good morning. Welcome to all the experts as well as the delegates who are attending this event from all over the country. This webinar is the initiative of PIT Chamber of Commerce, which is a 117 years old Chamber of Commerce, which is apex Chamber of Commerce with emphasis on technology upgradation, skill development, improving customer satisfaction, ease of doing business, promoting startups, employment generation. And of course, one of the major things is that this Chamber of Commerce has become one of the main Chamber of Commerce for policy advocacy, where we interact with the government authorities, with the central government, state governments, and put forward the viewpoint of the stakeholders, where ultimately the industry, where the service providers, where the MSMEs are getting affected. In the recent past, some of the webinars pertaining to insurance which were conducted by us was challenges and opportunities in implementation of IFRS in insurance sector in India. And we find that wherever I as an individual and of course Barrows Kamdin madam, that is where we have been interacting. People have been remembering that webinar and appreciating the effort taken by PIT Chamber of Commerce and Insurance Foundation of India in raising the topic. But madam, you will realize it that practically 11 months have passed and there is no activity happening in the authorities on introduction of IFRS standards in insurance industry. So I will highly appreciate if at appropriate time you can put an article in Business Standard or Economic Times on this important topic, that IFRS is very, very important for being introduced in the Indian insurance industry, because the chairman, Mr. Dr. Debashish Panda, is now talking of emphasizing on the achievements to be made by the insurance industry by 2047. That great goal can be achieved by the growth of Indian insurance companies as well as with the FDI which has to come from foreign. So IFRS was the issue which we were the only Chamber of Commerce who have raised this topic in the industry, and the stakeholders are appreciating that. Recently, we had another important webinar on Bima Sugam, where it is that at the time when we started thinking about Bima Sugam webinar, many of the persons from industry told me, oh, it's a dead topic. Don't talk of this one. It's a gone idea. No one is going to work on it. But it is surprising that the initiative of PIT Chamber of Commerce has raised the topic to that level where it is that now Bima Sugam is going to be a real positive introduction in the coming months. Maybe it is running late by a few months, but definitely it is going to happen. All these webinars, seminars, conferences which PID, Chamber of Commerce and Insurance Foundation of India have been organizing are being highly appreciated by all over, that is all the stakeholders in the country. And we are very satisfied and we have a sense of achievement that with the support of Babita Sharma and Sanjay Ahuja and from PID CCI Secretariat, we are able to achieve these things. This webinar is implications of taxation in general insurance industry, where it is that all of you are aware of that GST when it was introduced in 2017-18, and now it is that in the year ending 31st of March, we had a figure of more than 18 lakhs crores, and it is going to increase year by year. While the figures are a very big motivation to all of us and we appreciate it, but there have been many news items in the press, in the media pertaining to GST, GST violation, GST proceedings, and all that thing, where it is that some of the people from insurance industry and some are from non-insurance industry, their names have been appearing and all that thing. So today we are having with us the galaxy of experts from Deloitte, A to Z Tax Corp, Shadul Amarchand Mangaldas, and of course, a very well-known individual, Mr. S.K. Jain, who has been Vice President and Director of Insurance Broker Association of India for a long period. And now that he is acting more as an independent consultant, and of course, he specializes in GST also. So now it is our turn for the experts to come up with this, their viewpoints. So we are having Behroz Kamdin. She is a partner in Deloitte, and let us hear from her with broad comments on taxation on general insurance industry in India vis-a-vis other countries. Is it that we are having some different scenario, or it is that we are as a worldwide insurance industry is growing? In India, it is growing, and now it is that what we can learn from other countries. Broad viewpoint, and that is so. To you, Behroz ma'am.
Thank you. Thank you, Mr. Sethi. And thank you, Babita, PhD, CCI, Insurance Foundation, and thanks to all who have attended today's conference. So, Mr. Sethi has already put in a context for this conference, and I'm going to just add further to it. I'm a learner, so I don't actually practice GST regulations. But when we do direct tax, I think there's a synergy between GST and direct tax, and it's very important that we understand what the GST implications are. So basically, I'm a learner, and when I'm doing and talking on this, I'm trying to understand how it impacts industry and what is it that globally they have been doing on general insurance. So if I can share, or anyone can share the screen, I've got a small PPT. Can I share the screen?
Yes, please. You will be able to do it yourself, Behroz ma'am.
Sure.
Oh.
Can you all see the screen?
Yes, we can see it.
Okay. So basically, I'm going to be speaking on global GST trends, but just a few of them, not all trends and globally, which is there. And it may not be complete also in that sense. Like I said, I'm a learner and I've come to learn here. First, disclaimer that this is only for general information and cannot be relied upon for any decision making. When you look at GST collection, and Mr. Sethi did allude to it to say that we've been collecting a huge amount of GST. If you look at it for April 23, it was the highest collection which was done. It was 187 lakh crores, which was collected as GST. In May, the number is lower, but it is higher as compared to the earlier month. So if you see May 23, it is 1,57 crores, which is higher as compared to May 22, though a little lower than the April month. Now, interestingly, if you look at it, there is something as 34,972 crores on import of goods. And consequently, there's sales also, which is there of 901 crores on import of goods. If you look at May, that number has increased. So clearly, it looks like the import of goods has increased in India. And the GST on that, whether it's the main GST 41,772, and also the cess on that has increased in the month of May. So generally, it looks like we are importing a much more than what we were doing in a month before. What we've tried to do is capture what are the general insurance business and GST rates applicable to it in some of the countries. So when we look at it, India, of course, everyone is aware, we have a rate of 18% and the experts will speak on it. Corporate policyholders can get an input tax credit, but there are always conditions and limitations to it. Similarly, general insurance companies can also claim input tax credit. Again, there are some conditions attached to it, which the speakers will speak about. In UK, what we've seen is there are two different rates of, and they don't have something as VAT or GST, they have an insurance premium tax. In most of EU countries and even US, what we've observed is that they have something as an insurance premium tax which is levied. And UK, the rate is differential. There's 12% and there's 20%. So it's on an average, if you look at it, it's similar to what India is. But if you look, 12% is more on like car, home insurance, all of that is at 12. Travel is a higher 20%. When we go to German, again, German VAT, there's again insurance premium tax, which is there. And again, if you see, they are on insurance contracts that cover the risk in relation to Germany. And the rate of insurance premium tax is 19%, which is on average similar to what is there in India, if you look at it. Singapore also, they have GST on insurance contracts. There the rate has been increasing. So it was 7%, now it's going to be 8% this year. Next year it's going to be 9%. 7% was there for a very long time. And now they've started increasing the rates. There also they have certain exemptions, and they also have zero-rated international truck services. So reverse charge mechanism also applies in Singapore, which is very similar to what's there, I think, in India. But of course, we'll have to look at the nuances which are there in each law. Dubai also introduced VAT, and it's applicable at 5% rate on insurance contract. Again, there's something as exempt supplies which are there. And again, input tax credit or exempt supplies, which is again to be looked at. But zero-rated tax, if it's zero-rated tax, you can get an input tax credit. If it's exempt, then you don't get an input tax credit. So something very similar, we can see a trend across countries. USA, as we understand, USA doesn't have a VAT, but they do have an insurance tax, insurance premium tax at varying rates in various states. So, and they also, there's one more thing which was very little different, which I found when I was doing the search. In Singapore, of course, whenever we do a repair of motor car, you do have a VAT levy on that. On claim payments also, they had a VAT levy. So even if there's a cash payment made to the policyholder for motor cars, there was a VAT levy which was there. If you look at USA, they are very peculiar to say that if there's a premium tax credit, an individual could get a premium tax credit depending on conditions, of course. But in case of health insurance, now that's very useful because most people would want to have health insurance. And if I can get a credit for my GST which I've paid, that would really help India. So this is something which I really noticed in case of few countries. Now, when I look at the OECD, and OECD, because in direct tax, we keep looking at OECD and the framework that OECD brings about and the commentaries that OECD has. So when I looked at it from a direct tax and indirect tax perspective, we've seen that the tax trend has been increasing. So the VAT rate has been increasing from 76 to 2022. It's now an average of 19.2%. Which is very similar to what's India's rate, 18%. And in some countries, if you look at, there are two differential rates, the way we spoke of UK. And in some countries, there's no such insurance premium tax. So on average, it comes to 19.2%. Now we look at GST to GDP. In India, when we checked, and this is as per the economic survey, so it's a little off dated, it's of February 23. The GST collection to nominal GDP is around 6.51%, which was calculated based on the amounts which are disclosed there for a particular period. And GST is 28% of the total tax revenue for financial year 23 as per budget estimates. While the total consumption tax, which is GST, customs and excise, is around 48%. So if you look at it now, GST is really growing. Corporate and personal taxation is still there. It's still 52%. But GST has been increasing year on year. Now we look at OECD countries, and though this is dated because this is during the pandemic period, I couldn't find information of 21, 22. But if you look at it, still consumption tax to GDP is 9.9 as compared to India 6.5. So India still can have more GST collections done. Value-added tax as a component of total tax only 20%. India's is already 28%. And the overall share of consumption tax on an average in OECD countries is average, not particular country, on an average is around 30%, while India is at 48%. So there's something that our GST to GDP ratio is low, but the component of GST to total revenue was much higher in India as compared to an OECD average. This, I think, is very, I found it interesting because in direct tax also we look at OECD BIPS projects which have come in. So base erosion and profit shifting, how can you avoid that? How can you avoid double taxation? How can you avoid double non-taxation also? We do have trade, and we've seen that our trades across borders have been increasing. The OECD had come out with the guidelines in 2016. The work on that started in 2006 itself. And in 16, there were around 165 countries which have VAT implemented. Now, if you look at VAT, international trade and goods, always there's this issue whether, where it should be taxed, at the source country or at the destination country. So it's always good to have a tax policy framework on that, and a guidelines was issued by OECD for this to say that where the focus should be lying. Now, if you look at it, they have come out with certain principles. Overarching purpose of VAT should be broad-based tax on final consumption. When we speak of final consumption, it should be at household final consumption, not at business level. And therefore, you do have this input tax credits. If that is the principle which has to be followed, it should be looked whether India is actually doing that manner. The central design feature of VAT is staged collection process, which we've seen at every stage wherever the value is added, there should be a collection of VAT, but eventually it should be coming to the household for final consumption. The destination principle should be followed, and maybe that's adopted in India. Maybe other speakers can add to it. In international trade, wherever the destination is, you need to pay back there. And the last one is the generally accepted principles of tax policy to VAT. And of course, we've seen this, and they have referred to the Ottawa taxation framework conditions, which was in concept for digital. So in case of e-commerce and digital aspects, this framework was there. And there they have given some very good principles which most countries should adopt. One is neutrality. This was a concept of e-commerce to say that whether it's e-commerce or whether it's physical permanent establishment, the tax should be neutral. There should not be any advantage to any particular person. The second was efficiency. It should be at low cost, both for the person who's paying it and also for the government who's administering it. There should be certainty and simplicity. It should not be so complex, and there should be a certainty attached to it. Effectiveness and fairness and flexibility that it can be upscaled. So these are some of the principles which were listed out in that report and the guidelines. And if those are followed, I think a lot of litigation would then not be there. So this was the context. And now I would request Mr. S.K. Jain to discuss further on the GST implications in India.
Okay, thank you, madam.
Do I hand it over to Mr. Sethi?
Let us see the backgrounder which is prepared by Mr. S.K. Jain and which covers the various aspects of GST and very specifically pertaining to Indian insurance industry and most of it again to general insurance industry. And that will be setting the tone, and that is what is the scenario, how the people are looking at it, how the industry is looking at it. So Mr. Jain.
Okay, thank you, Mr. Sethi. Mr. Rajesh, can you show my PPT? Or I have to. Mr. Rajesh. or you permit me to share the screen. Mr. Rajesh,
Hello.
hello, Rajesh.
Sir, Sanjay ji said you can share your PPT, sir.
No, it is
You
not
can
permitting. No, it is not permitting me.
Okay, let me check.
Other participant is sharing.
Okay,
Giving
let
the
me check.
error.
Let me check, sir.
While it is being done, and that is, we are pleased to inform you that Mr. S.K. Jain has written a book on practical aspects of goods and service tax on insurance industry. And this book is, as we had mentioned in the brochure, which was brought out by us.
Mr. Jain, please share from your side, sir. Now you will be able to share, sir.
Okay.
Yes, be able to see, sir. Go ahead.
Okay.
Very good.
Okay, good morning, everyone. Namaskar. This is a presentation on the impact of GST on insurance, underwriting, and claims. The insurance industry is a very peculiar industry. It is a risk-bearing industry providing for financial protection to assets, human beings. It is not selling the tangible product, rather it is selling the intangible product. So that's why it falls under the service industry, and the insurance sector has been in service tax since 1994. Similarly, after changing the GST from 2017, GST is applicable to the insurance sector also. Section 2, subsection 102 of the Central Goods and Service Tax Act has defined the services and where the insurance is considered as a service sector. There are three types of insurers. One is the life insurers, general insurers, reinsurers. What the life insurance does, it covers the risk of human life by issuing the term plan. It provides saving and investment plan, endowment plan. It provides annuity pension plan, which is payable annually, half-yearly, quarterly, monthly. General insurance protects the risk of the property against any eventuality and health for the human beings. Property may be fixed at one place, it may be moving from one place to another place, or it is under construction. It may be health insurance, personal accident insurance, or the liability insurance. It is being issued by the general insurance. And the reinsurers, they are bearing the risk of the other insurance companies. That is from insurers to insurer, not the individual business they are underwriting. All three types of insurance companies are bearing the risk, and but to bear the risk, they are charged the premium. And therefore, the main source of income for the insurance company is the premium. All premium received by the insurance company is subject to the GST. It may be the life insurance, general insurance, and reinsurance, but the method of calculating the GST is different. Life insurers charge the premium only the risk premium, not on the saving premium. So this is the peculiarity in this, that they charge the GST on the risk premium element, not on the total element. Sometimes the risk premium and the saving premium can be identified, but sometimes it is not distinguished. So the standard format has been prepared, formula has been applied, how to charge the GST on the products. For every product, it is considered the first year premium. 25% of will be considered as a risk premium, and GST will be charged on 25%. And subsequent years, it will be 12.5% will be considered as a risk premium, and GST will be applicable on the 12.5% only. Example, premium is a 1 lakh per annum. First year, the risk premium will be 25%, that is 25,000. GST will be 18%, 4,500 rupees will be the GST. Subsequent years, risk premium will be 12.5%, 12,500, GST will be 2,250 will be the GST. There are certain policies which are exempted from the GST, and these are list of the policies issued by the life insurance companies, which is not taxable. Similarly, for the general insurance company, the taxes, whatever the policy they are issuing, it is taxable, and the rate is 18%, except the third party premium on the goods carrying vehicle, which is 12% with effect from 1st January 2019. Third party is less. For others, it is 18%. And certain policies, again, they are exempted from the GST. These are the various list of policy which are exempted from the GST. Reinsurer, it is getting the business from other insurance companies, so that is also a taxable. They are getting from the abroad also. It is considered as the export sales, and if it is giving to the outsiders outside country, then it is a import. So they accordingly GST is applicable to the reinsurance companies also. It is seen the government has source of revenue for the 2023 and 24. Provisional insurance premium in 23-24 is the 10 lakhs crore. It is inclusive life as well as the general insurance. The average of the GST is the 50,000 crores. The main peculiarity of this general insurance, the insurance sector, is that whatever this GST is received by the insurance companies, it is not adding further, because whatever the insurance company is getting the premium and GST, after they are distributing to the distribution channels, they are paying to the commission to the brokers, agents, similar, so they get the credit on that. And the another part of this insurance is that claim is not a taxable. Claim part, actually, this insurance claim is not a taxable, because this is the major expenditure for the insurance company. The major expenditure is the insurance claim. Life insurance claim payable on death, accident, illness. General insurance claim, in case of property damage destroyed, the general insurance compensates the policyholder as per terms and conditions of the insurance company. Similarly, the insurance claim, reinsurance claim is paid by the insurance companies to the other insurance companies. Insurance claim is not subject to GST. Why not subject to GST? It is an actionable claim. It is defined under Section 3 of the Transfer of Property Act. And Honorable Supreme Court held the judgment, Sunrise Associates versus the Government of NCR Delhi, where it is said the insurance claims are actionable claim. So these are not taxable. They are not subject to GST. So that's why the no insurance company is paying the GST on any claim. If you can give the, you can read the detail of this section 7.2, subsection 2, where it is defined it is not a subject to GST, insurance claim. And the schedule 3 of the CGST Act, they are defined actual claims. It is not subject to GST. Further, on the GST Act, it is mentioned every registered person shall subject to condition and restriction as may be prescribed and the manner specified is entitled to take credit of input tax charged to any supply of goods or services. This is a standard rule ITC, where the credit is available to whatever the people are buying the insurance and they are paying the premium along with the GST and their credit, they are getting the credit of the whatever the GST they are paying. But section 17 subsection 5 subsection H says, if there is any property damage, goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples, and then the input tax credit is to be reversed. It is not available. If the property is damaged, it is a damage destroyed due to fire, then whatever the credit has been taken by the insured, it has to be reversed under section 17 subsection 5 subsection S. This is very important section which we have discussed in other with the help of the example. Now the question arises whether the sum assured of the property stock should inclusive GST or not. It is very important. People are that all the policy holders, businessmen, they don't give any importance to whether the GST should be included or not in this or not. Yes, it should be always whatever the sum assured is taken, it should be inclusive of GST. Otherwise, as per section 17 subsection 5 subsection H, they have to reverse the GST as per the act. So therefore, in case they don't get the, they don't include in the sum assured GST, they have to incur the loss. They have to pay from their own pocket for the GST. Most common policies is the fire insurance, that is the assets insurance known as standard fire policy, Bharat Laghu Udyam, Bharat Laghu Suksham, Bharat Grah Suraksha. And when the goods are moving from one place to another place, then it is covered under the cargo insurance. It may be export, it may be import, it may be domestic. Then there's a vehicle insurance. It is a car, two-wheeler, three-wheeler, passenger vehicle, goods carrying vehicle. Insurance for employees, group health insurance, group personal accident. So these are the most common policies are purchased by the any businessman. For the capital goods, in capital goods, there is a condition. Under GST, the life of capital goods is considered 5 years. If the person has purchased the capital good machinery in the 2023, and he has taken the credit for that. Suppose this policy, this machinery damaged in 2025. After 2 years, it is damaged. So it means he has to reverse the GST, whatever he has taken the credit of GST for 3 years. But it is considered, otherwise it is considered for the life of machine is 5 years. So GST is, if it is lost during the first 5 years, for the balance year, the GST has to be reversed. For the other property stock, this is immediately GST to be reversed. And employees related insurance, the employer is taking the group health insurance or the group personal accident insurance. Whatever GST is paying on that, it is not allowed to take the credit unless until it is part and parcel of the appointment letter. If it is part and parcel of this appointment letter, part of the cost of the employee, then he can avail. Otherwise, he cannot avail the credit on this policy. Take the example. Suppose the person has taken the insurance without GST. He does not mention about the whether he doesn't mention it is inclusive of GST. Building, because there is no credit, is GST is available, so it is considered as a 3 crores as a sum assured inclusive GST. Plant and machinery, assuming 3 years old, 10 crores. Stock without GST, 25 crores. Furniture fixtures without GST, 1 crore. Office equipment without GST, 50 lakhs. And the loss has occurred. 25 lakhs in the building, 1 crore in the plant and machinery, 1 crore for the raw material, 1 crore for the WIP, 1 crore for the finished goods. and the furniture fixture, I am assuming there is no loss. So how the claim will be considered when the person has not included in the sum assured the GST amount? I am not going to the other policy terms and condition, assuming this 25 lakhs is incurred and it is payable, so it will be paid, no impact of the GST on the building. Plant and machinery, it is 3 years old, it is without GST. Insurance company will pay 1 crore loss as it is incurred, it is payable. But the only thing is, insured has to reverse the GST for 2 years. He has to reverse. The total GST was 18 lakhs. For 3 years, he has availed 10.8 lakhs. He has availed the benefit, and the balance 7.2 lakhs he has to reverse. Though he will get from the 1 crore from the insurance company, but he has to reverse in the books in the GST account 7.2 lakhs. He has to pay to the government back. He cannot take the benefit because he has not included in the sum assured. So insurance company will not pay it. He has to pay from his own pocket 7.2 lakhs. Now take the example of the stock. Total sum assured 25 crores, raw material 1 crore, WIP 1 crore, FG is the 1 crore. How it will be calculated? Raw material 18% of 1 crore, 18 lakhs is to be reversed. WIP, because WIP is a 1 crore, it includes so many things, raw material as well as the manufacturing cost. So our GST will be reversed only on the raw material. I have considered 80% of WIP value is the material cost. So 80%, 1 crore of 80%, 80 lakhs, 18%. So it will be 14.4 lakhs is to be reversed. Similarly, in the finished goods, 90% of value is the raw material. So the 90% of the raw material value, 18% is to be reversed. It means 16.2 lakhs. Total 48.6 lakhs he has to reverse the GST. Though insurance company will pay 3 crore, but he has to reverse the 48.6 lakhs under the GST ledger. He has to pay from his own pocket because he has not included that amount in his sum assured. Generally, it is seen the surveyor insists to reverse the GST amount. Surveyor has no right to become an officials of the GST department because he has to assess the loss as per the policy terms and condition. He cannot force to reverse and only then he will pay the claim. No, it is not possible. It is wrong on the part of the surveyor. So it means total assessment will be total loss payable 4.25 crores, reversal will be 55.80 lakhs. Insurance company will have 4.25 crores, but reversal he has to do from his own pocket 55.80 lakhs. This is in case he does not include the GST. I consider the same example and considering it is inclusive of the GST. Sum assured inclusive of GST, loss occurred inclusive of GST, amount to be paid. Similarly, plant and machinery, 1 crore loss. Insurance company will pay 9.28 lakhs as on account of plant and machinery, and 7.2 lakhs will be paid if the insured gives the documentary evidence that he has reversed the GST in the books. So surveyor will allow to pay the 7.2 lakhs on account of GST. Similarly, in the stock, insurance company will pay 2.5 crores and 48 lakhs will be only on the reversal of the GST. Once it is inclusive of GST and his sum assured is inclusive of GST, and the insured wants to claim the GST from the insurance company, then it is the duty of the insured to give the documentary evidence he has reversed the GST in the account. Only then the insurance company will allow to pay the GST. Marine cargo insurance export. Whenever the marine cargo insurance policy is taken, The people generally, the insured is taking the insurance only for the invoice value, export invoice value only. They forget that while it is transiting during transit, it is the GST is also applicable on the export consignment. Generally, there are two invoices are prepared for the export. There is the export invoice and the commercial invoice. Commercial invoice includes the GST, and people while taking the marine insurance, they cover only the export invoice value. As a result, if there is any loss during transit, then the insurance company will pay the export invoice value, not the GST, but GST has to pay to the government. So that's why the people, they have to be very careful while taking the insurance on the marine cargo export. They should declare, they should include the invoice, that the GST also in the value. Similarly, in the import, while importing the material, the custody as well as the GST is payable. But the declaration given by the insured is only the basic sum assured, the sum assured and the custom duty, not the GST. If it is damaged during the transit, then he has to reverse, he has to pay the GST to the government, and he will not get any benefit from the insurance company. So always for the import as well as the export, GST should be included while declaring the sum insured. Vehicle insurance. Any vehicle should be inclusive of GST, as it is not permissible on the vehicle unless until the user is the tour and travel operator or the transporter. No GST is applicable. GST's reverse is available to the phone vehicle unless until it is being used by the tour operator. Suppose basic cost of BMW is 75 lakhs. GST is 25 lakhs. Total is 100 lakhs. Credit availed by the tour operator is 25 lakhs. IDV of the BMW is 75 lakhs. He has taken the insurance of rupees 75 lakhs only. After 3 months, the BMW damage, met with an accident, the total damage. Insurance company will pay only 75 lakhs as a IDV. And the the tour operator have to reverse the 25 lakhs as GST. So it means immediately he will incur the loss of 25 lakh rupees because he will not get the benefit of GST from the insurance company because he has not taken the insurance of the GST. This is the main reason that one should include vehicle insurance should be inclusive of the GST. Otherwise, the problem will be faced by the insured. Second is the on insurance, that vehicle insurance as well as the vehicle is repaired. Whether the GST paid on that, it is whether tax credit can be availed or not. It is not allowed. If the insurance premium is paid on any vehicle except tour and travelers, or the repair charges, GST is not allowed. You cannot avail the GST. And I have seen the lot of people are taking the credit for that, which is wrong. On the insurance premium, it is not allowed, and the repair charges, if any GST is paid, that is not allowed to avail the credit. The main issue is what the insurance company is doing, because the insurance companies are providing the cashless facility for the vehicle owners while issuing the policy. As and when the vehicle met with an accident, the insurance companies are asking the garage owner to raise the invoice in their name. The invoices are raised in the favor of the insurance company and they are availing the credit, which is a wrong practice, is the misuse of the provision of the GST. Insurance company cannot avail the benefit of the GST credit while they are not owning the vehicle and they are not owner, as well as they are not only they are paying the claim amount, and claim amount is not taxable. So this is a wrong practice followed by the insurance companies. Remuneration paid to the distribution channels agent brokers, corporate agents, insurance marketing firm. It is considered an auxiliary service. When it is an auxiliary service, it is also taxable. Any payment to these distribution channels, it is subject to GST. Sometimes it is paid as a in kind also. One is the remuneration is paid, reward is paid, but sometimes by way of in kind. In kind means domestic tours, foreign tour, whatever expenditure incurred on that, it is GST is applicable on that, on the foreign tour and the domestic tours. I am giving the case study, very interesting case studies, the impact of GST. A manufacturing unit is having the floated declaration policy for raw material as the finished goods for 200 crores, having 25 godowns all over India. A policy is being issued for the last 10 years. As per the terms and conditions of the policy, every year he is declaring the stock and he is getting the refund also. Every year he is getting, he is very comfortable. In 2022, there was a loss due to fire. Fire claim was filed with the GST amount. Insurer found while the declaration of the earlier years is without the GST and the refund of premium was given to the insured. While claiming the amount, he is including the GST. Now the insurer wants to recover the premium amount on the GST also for the earlier years. That is very tricky whether the insurance company can recover or not. There is a big issue and is still hanging for the discussion. The problem is not resolved. So the main importance is that whenever you are insuring the goods, it should be inclusive of the GST. Otherwise, the problem will be faced. Another issue is another policy. Case study is there. Standard fire policy. Loss is due to flood. And the goods were damaged, not destroyed. I don't know whether you know the difference between the damaged and destroyed. Section 17(5)(h). Here the word is used goods lost, stolen, destroyed, written off, or disposed of by way of gift or free. Only then the reverse is to be done for the input tax credit. No, there is no word used as a damage. The difference between the destroyed and damage is, if you read the Black Law Dictionary, destroy means when the goods are destroyed, it changes its shape, totally shape change. It is not visible what was the product. When it is damaged, it means it is in the position can be identified what was the product. So loss is only in the case of destroyed, not in the case of damage. So what the person did, due to flood, the material was damaged, not the destroyed. It was visible. So he sold the damaged material as it is with the same HSN code. When he sold the material with the same HSN code, he did not reverse. He did not reverse the GST. So he saved the money. In two incidents, one insured saved about 15 lakhs and second he saved about 25 lakhs due to not reversal of the GST. Because he said the my product is the damaged, not the destroyed. The person has sold the material not as a scrap. He has sold the material as is with the same HSN code. Once it is sold with the same HSN code, then there is no need to reverse the GST. This is how these people are interpreting the reversal of the GST. And there are some changes in the taxation, though it is not related to GST, but I am touching because some query were received. What is the amendment in the taxation in the life insurance? That after 1st April 23, any premium paid more than 5 lakhs. So any proceeds that will be subject to TDS, it will be added in the income. If the person has taken 3 policies, first policy for 2 lakhs, second policy for 3 lakhs, 3 policy for 2 lakhs, then the insured can choose the 2 policies up to 5 lakhs, for which the proceeds will not be taxable. After that policy, if any proceeds come, that will be taxable. This is a major change in the life insurance and the recent budget that is effective from 1st April 23. And tax is deducted 5% of the maturity amount less premium paid. If I am paying the premium 1 lakh per say 5 lakhs per month, so per annum, I paid for 12 years. I paid 60 lakhs. I am getting 1 crore. The TDS will be deducted 1 crore minus 60 lakhs. On the 40 lakhs, the TDS will be deducted, not on the 1 crore. I got about 8 or 9 questions. I am answering those questions. The first question came, why does the insurance company not issuing an invoice like other invoice providers upfront to receive the
Answer, what we can do is that we can take these questions
Okay.
towards the end, so
Okay.
that we can have the continuity of the
No
presentation.
issue, no issue, Sirisa. Okay, thank you very much.
Thank you. Now we are having Mr. Sagar Shah. He is covering us on interpretation of GST for payments of remuneration, rewards, gifts to insurance agents, insurance intermediaries. And most of the news items which we are reading on the newspapers or media or TV channels we are watching is pertaining to these issues. So, Mr. Sagar Shah, please.
Thank you, Mr. Sethi, and good morning, everybody. So it is my pleasure to discuss the GST implications in respect of payments made by an insurance company to the insurance agents or insurance intermediaries. Now, before we get into the payments and the types of payments made by the insurance companies, it is important to understand a few terms, such as insurance agent, insurance intermediary, insurance broker, etc. Yeah. Insurance agent means a person who receives commission for soliciting or procuring insurance business. Now, the term insurance agent, the manner in which it has been defined under the regulation, it does not explicitly say that insurance agent means or covers an individual agent. But that is the interpretation coming out when we look at the other definitions, relevant definitions under the regulation. The term intermediary or insurance intermediary is relatively much wider, and it covers insurance brokers, reinsurance brokers, insurance consultant, corporate agents, TPA, surveyors, loss assessors, etc. So like I said, insurance agent does not explicitly say that it will cover only insurance agent, since corporate agents have been explicitly covered under the definition of insurance intermediary. An interpretation can be made that insurance agent would cover individual insurance agent, whereas corporate agent would be treated as insurance intermediary. Now, this distinction is very important to understand the GST implications in respect of payments made by the insurance company to such individual or corporate agents. Before we move on to that, like I mentioned above, we'll also discuss the term insurance broker. So broker means a person who is a direct broker or a reinsurance broker who has to also be registered by the authority. Now, if you want to understand what is the distinguishing factor or how do we distinguish an insurance agent and an insurance broker, the principal and the most important difference is that an insurance agent represents an insurance company in respect of whom they are soliciting insurance business, whereas insurance broker need not necessarily be associated with any one company. Having said that, the corporate agents, the insurance brokers, all of these entities, all of these persons are mandated, are obligated to register themselves and obtain a license from the regulator. Yeah. Now, before we move on to the types of the payments and the GST implication, we can understand the relevant statutory limits that the insurance companies have to abide by. So when we talk about the payments that an insurance company can make to its insurance agent or insurance intermediary, the insurance companies do not have a free hand with respect to the commission payments. They have to abide by the statutorily prescribed limits insofar as the payment of commission or any other remuneration to insurance agent or insurance intermediary is covered. So the limits that the insurance companies have been following until quite recently, dependent on the nature of the general insurance product. For example, if we talk about the commission that can be paid to insurance agent or an insurance intermediary for fire insurance, the commission, the maximum amount that can be paid by the insurance company ranged anywhere between 5% to 16.5%, depending upon the scenarios prescribed. There were similar thresholds prescribed for health insurance, for motor insurance, for marine insurance, etc. Pursuant to a recent update, recent amendment in the regulation, the sublimit depending on the underlying products have now been done away with. With effect from 1st of April 2023, it has been prescribed that the insurance companies can make the payments to these agents and insurance intermediaries as per the board approved policy, insofar as the total payments, the total expenses of the management do not go beyond 35% of the gross written premium in case of a standalone health insurance company, or in case of any other general insurance company, insofar as it does not exceed 30% of the gross written premium, it will have deemed to have complied with the amended regulatory threshold. The industry has welcomed this move, as they need not abide by the sublimits depending upon the insurance product, and insofar as they are complying with the board approved policy on the total threshold prescribed for the expenses, it can be deemed that they have complied with the regulatory requirement. Right? Having understood the above, we can now proceed to understand the GST implications in respect of services by these insurance agents and insurance intermediaries. Now, it is pertinent to note over here that services by an insurance agent, which we discussed a while back, that insurance agent would typically cover individual insurance agent, have been covered under the reverse charge notification, which means that for the payments made by an insurance company to individual insurance agent, the insurance company will have to discharge the GST under reverse charge mechanism, and the insurance agent, the individual insurance agent, will not be obligated to collect and pay GST in respect of these consideration received from the insurance company. Right? Since the reverse charge notification states that services by an insurance company to services by an insurance agent to an insurance company would be covered under reverse charge, and since insurance agent does not explicitly cover the corporate agents, GST in respect of services by corporate agents to insurance companies would be covered under forward charge mechanism. That is to say that for these services, these corporate agents would be liable to collect GST from the insurance companies and deposit it with the government in respect of services provided by them. Yeah. Now, going a bit further, what could be the different types of payments that could be made by an insurance company to these agents and intermediaries? Now, these payments could either be in the nature of remuneration, or it could be in the nature of rewards, or it could also be even by way of a gift. Now, when we say that an insurance company pays remuneration to the insurance agent or an insurance intermediary, these remunerations would ideally imply that it is a consideration paid by way of monetary payments. So, by way of payment of commission by an insurance company to an insurance agent, the monetary consideration flowing in the form of remuneration, the GST implication will be that the company will be liable to pay GST under reverse charge for the services by the insurance agent, and for the services by the corporate agent will be collecting and depositing it with the government. So the implications in respect of monetary remuneration consideration paid by insurance company to the insurance agent we've just discussed. We can move on to the other type of payment that can flow from an insurance company to the insurance agent or intermediaries. Now, when we talk about the other type of payment, which is rewards, now an insurance company can reward an insurance agent or an insurance intermediary either by way of monetary rewards or non-monetary rewards, right? So the GST implications in respect of monetary rewards paid by an insurance company to the insurance agents and intermediaries will be similar to what we just discussed, which is in the case of remuneration. In case of non-monetary rewards flowing from an insurance company to an insurance agent, GST will have to be paid under reverse charge mechanism in so far as these non-monetary consideration, these non-monetary rewards are received by individual insurance agent. Now, when we try to understand that what could be such monetary reward, non-monetary rewards, if we take an example, let's say, for example, there is a reward by way of some coupons, or there is some reward by way of some tangible rewards, which is being offered by the insurance company to the insurance agent. In that case, when the insurance company procured such tangible rewards, it would ideally have incurred GST in respect of such procurement. But as Mr. S.K. Jain also touched upon us a while back, in case of non-monetary rewards or gifts, the ITC, the input tax credit, is ineligible in the hands of the insurance companies. So therefore, in respect of non-monetary rewards flowing from an insurance company to an individual insurance agent, while the insurance company will be obligated to pay GST under reversal mechanism, it would not be entitled to avail the input tax credit in respect of such expenses incurred for extending non-monetary rewards. The other type of payment that could flow from an insurance company to the insurance agent could be in the form of gift. Now again, when we try to understand what could these gifts be, these gifts could also imply non-monetary tangible gifts flowing from an insurance company to an insurance agent. Now, similar to non-monetary rewards, the GST implication will be largely on the same lines in case of gifts by an insurance company to the insurance agent. That is, wherever the recipients are individual insurance agents, the GST company would ideally be obligated to pay GST under reverse charge mechanism, but input tax credit in respect of such gifts procured is explicitly disallowed by way of section 17 subsection 5, as it is included in the section for blocked. Right? Having discussed the payments made by the insurance companies to insurance agents and insurance intermediaries, it is also pertinent, like Mr. Sethi just informed, it is also pertinent to briefly touch upon the current ongoing investigations that have been initiated upon the insurance companies. Since a few months ago, I would say it's rather more than a year ago, the indirect tax investigation authorities, which is the Directorate General of GST Intelligence, have initiated investigations on the general as well as life insurance companies by challenging the input tax credit that they have earned. The allegations put forth by the investigative authorities are that these insurance companies have not received the services, or the payments made by these insurance companies are over and above the statutory limits prescribed by the regulator. We've seen, like Mr. Sethi informed, this has been in the news. This has been doing round of the news since a long time, and I think these investigations could continue for a while. So, in light of these investigations already initiated by the indirect tax authorities, considering the increased transparency these days between the direct tax as well as indirect tax authorities, investigations have also commenced already by the income tax authorities, whereby they are challenging the deductibility of expenses on similar grounds. The paradigm shift of the prescribed limits, that is, discontinuation of sublimits in respect of each general insurance product, and implementing an overall limit that an insurance company will have to abide by, this paradigm shift could have a significant impact on such disputes prospectively. That is it from my side on the payments by an insurance company to the insurance agents and intermediaries. Over to you, Mr. Sethi.
Thank you very much. Now we are having Mr. M.S. Money, and he's making us aware of implications of GST under reinsurance. And he's also covering the point on, because recently we have been hearing a lot about Gift City and how it is progressing and all that thing. That is GST on insurance, reinsurance, when the unit is set up in SCZ Gift City. Let's, Mr. Money, sir.
Thank you, Mr. Sethi. I think we are running a little behind time, so I don't know how much time I have got, but I will try to do, whatever I do in the shortest possible time. So it is very good to be in a forum like this where we are discussing only insurance-specific topics, because normally what happens is that when we discuss financial services overall, insurance gets allotted a very small talk time. In a 2-hour session, you need to discuss everything to do with insurance in 20 minutes. So great that we have a forum like this where we can discuss insurance in a bit of detail. So when we come to reinsurance, what basically we have to understand is reinsurance is an insurance for the insurance companies. That is the simplest way of understanding reinsurance, because most insurance companies undertake a lot of risks. All these risks sit on their balance sheet. So if unfortunately any of these risks devolve, it is an insurance company that is liable to pay this to the insured. Now, no insurance company in the country or in the world has a balance sheet size that can take care of all the risks that they insure. So if even 20% of their risks mature in one particular year, let's say, unfortunately, we have an earthquake in a year, a flood in a year, a corona again in a year, and all these come together in the same year, possibly all the insurance companies in a particular country or in a particular area will go bankrupt. So that is where the need for reinsurance comes. And that is why Insurance Act is very categorical in saying reinsurance is mandatory, it's not optional. So every insurance company needs to reinsure a portion of its risks. It can do this in either of two ways. It can take certain kinds of risks and reinsure them. So it may take all fire risks or all marine risks and insure them, or all health risks and insure them, or an insurance company equally may opt for taking certain kinds of policies and take all the policies together, bundle them together and reinsure them together. The key challenge that comes for insurance companies, again, this is again a very good problem to have because it is a function of the expansion of the size of the insurance business in India, how big general insurance in India has grown. Around 15 years back, large part of the reinsurance that used to happen by all the Indian insurance companies used to be with GIC. And GIC was sufficient to insure majority of the risk, excepting some very large corporate risks, which used to go to Lloyd's and others. Over a period of time, the size of the general insurance industry in India has become so big that it is no longer feasible for any insurance company in India to have a reinsurance only with domestic reinsurance. Consequently, we have a large part of the reinsurance that happens with domestic reinsurance, a large part which happens with overseas insurance. Now, if the reinsurance is with domestic insurers, to a very large extent, the GST on that becomes simple because it's a service provided by one domestic entity to another domestic entity. We have to be mindful of the fact that pre-2017, when GST came in, even this was a disputed position. So the dominant view at that point of time in the insurance industry was reinsurance is essentially sharing of risks. It is not a service provided by somebody to somebody. I have a risk on my books. All that I'm doing is I'm passing on a part of that risk to somebody else's book. It is in the nature of a financing transaction. It is not in the nature of a service provision. This was the dominant view that prevailed in the industry till 2017. And that led to a lot of litigation as well. But after the onset of GST, fortunately, the issue has got settled largely, where as far as domestic reinsurance is concerned, most of the insurance companies are paying paying GST on the premiums that they see. Now let's come to the overseas reinsurance. In the overseas reinsurance, again, there are broadly two buckets. One bucket is that the insurance company in India is ceding premium to an overseas reinsurer which does not have an office in India. The second is the Indian insurance company is ceding a part of its premium to an overseas reinsurer which is also having an office in India, which does business in India. And how do these two terms evolve? Now, quite a few companies feel that the reinsurance companies which have an establishment in India are merely doing a marketing and liaisoning and a facilitative service. They are not taking the contract on their books. And many of the overseas reinsurers do not have the ability to take on large amount of risks on their Indian books. So the risks are always taken in an overseas jurisdiction, in the books of the overseas jurisdiction. They are not taken in India. Therefore, there comes a necessity for the Indian insurance companies to treat this as a transaction between a domestic entity and an overseas entity. And similar to all other transactions, where there is an entity based in India, which has a contract with an entity based outside India for any kind of services, this contract also would attract a reinsurance. Large number of them are paying a GST on reverse charge basis. But when they pay a GST on reverse charge basis, here is a challenge that they face, for which unfortunately there are no easy answers till now. If it is paid on a reverse charge basis, it is easier for the insurance company because then they are eligible to take a credit on virtually an immediate basis. There is no question of a reconciliation. There is no question of seeing whether it is paid or not paid, whether the opposite party has filed a return or not filed a return. So reverse charge is easier. However, reverse charge is possible only when they can prove this is a contract between an Indian entity and an overseas entity. If the Indian office of the overseas entity has played a key role in this contract and is also party to a contract, then it becomes a domestic transaction. And this is an issue with which some of the insurance companies and some of the reinsurance companies operating in India have been grappling with. And as I said before, since GST is a new law, it will have to pass the crucible test at some point of time, possibly over the next 3 years or so. The GST audits have recently started. A lot of investigative activities are also underway for the insurance sector. The investigative activities are not only in respect of insurance intermediaries, there are several other aspects of insurance companies that are being looked at. Keeping that in mind, once we have an issue which crops up over the next 6 months or a year or so, that is when it will be put to test in a crucible. And that is when we will have a definitive view coming out either from CBIC in the form of a circular or in the form of litigation, which goes up to the tribunal, gets heard and comes back. Till that time, while the issue is much better settled compared to the service tax regime, it is not completely settled. It still will have to pass certain tests. Now, moving on to what happens in respect of the GST on SEZs and gift city specifically, we have to bear in mind when we look at it that gift city is also a SEZ in some form. It is a super SEZ in some form. So to a very large extent, the provisions of the SEZ Act would have overriding effect even in respect of the gift city. While there are specific laws, specific provisions, specific notifications in respect of IFSC gift city, it is largely to be considered as an SEZ. And this I'm saying more from a GST perspective. Since it is largely to be considered as an SEZ, there don't seem to be a great degree of need for clarity on this. And whatever clarity is required in this is something which potentially will happen over the next 6 months to a year. Because at a broad level, the services are to be treated as zero rated, provided these are used by the SEZ or IFSC unit for authorized operations. And that is similar to all the other SEZ units. If they use a service, input service for an authorized operation, it is treated as zero rated. And potentially, an insurance service would be used only for authorized operations unless the insurance service are for the personal consumption of the employees who are employed in that particular unit, in which case there is possibility of some level of litigation. The question that comes up is when we have an entity located in gift city or IFSC, what happens in respect of the reinsurance of those contracts? Because there again, an Indian insurance company is issuing a contract. If these contracts are large enough, they will need to be reinsured as per the mandate of the Insurance Act. What happens to them? So at a broad level, what happens is that if the insurance company is located in an SEZ and it is able to reinsure it with an overseas reinsurer, in that case, the same treatment would apply. It would not get covered under GST. However, if the entity located, the insurance entity located in the gift city gets the reinsurance done with an entity located in the DTA of India, in that case, there is a possibility of a risk of it being challenged. It is always possible to even argue that by saying that this is essentially a reinsurance. And as has been argued in the past, reinsurance is not necessarily a new insurance policy. It's not new insurance business. It is merely the same business in order to undertake the risk-taking ability and leverage that across insurance entities, that it is a risk sharing. And therefore, it would be possible to argue that even when there is an entity in IFSC or gift city, which does an reinsurance with an entity located in India or the DTA of India, even in that case, it would be possible to argue that, look, this is a contract which should remain outside the purview of GST, largely because it is merely sharing of an insurance risk. It is not per se a new insurance contract. So that is overall, I think I have just exhausted the time that was allotted to me, but happy to take up any questions that might come up when we do the Q&A.
Thank you very much.
Mr. Sethi.
Now we have Mr. Bimal Jain, and he is guiding us on what importance should be given to GST accounting and compliance, and how to avoid violation of GST rules and escape penalties, litigation, poor PR, which many companies are facing in the country. Mr. Bimal Jain.
Mr. Sethi,
Yes,
and
sir.
good afternoon. Good afternoon to all distinguished participants joining today. Today we are discussing at length GST implication on general insurance and life insurance. As we all know that total premium consideration for this industry is 10 lakh crore rupees. 10 lakh crore rupees. And GST implication is around 50,000 crore rupees. So this industry is a wide industry. And importantly, what we are finding from pre-GST to GST regime, the GST rate implication. In pre-GST, service tax rate was 15%, but now GST, it is 18% GST rate. Yes, in case of B2B transaction, where credit is available to the recipient, then it is understandable that credit is available. It is not creating extra implication in our cost or provision. But wherever B2C transaction, insured is not registered in GST regime. And to them, we are charging 18% as against 15%, which was in pre-GST era. 3% is the extra implication in its hand. So we have to understand this is the first aspect which we are discussing. Of course, GST revenue collection is now highest ever in April 23. We have seen 1.87 lakh crore rupees as against 1.67 lakh crore rupees in April 2022. On an average, it is now more than 1.5 lakh crore rupees. So revenue collection per month is really mind-boggling, and it is increasing day by day. Now, what's happening, my topic is a little different, which is given by Mr. Sethi to me. He wanted me to discuss on the compliances part. He wanted me to discuss the, how we can minimize the risk of, penalty levied by the department. When I talk about penalty levied, the important one, the DGGI recent investigation against so many insurance intermediaries. And we have seen that so-called notices being issued to SDFC Life for 942 crore rupees. And they have deposited around 250 crore rupees as a pre-deposit under protest. So-called notices being issued to Prudential ICICI Life of 492 crore rupees, and they have also deposited 190 crore rupees as a payment, but under protest. So if we look at overall aspect in insurance sector, let me start with the very first point, input tax credit. Yes, I was hearing Mr. S.K. Jain from his presentation. Some of the things which I'm differing with, so I'm putting forth my submission to all of you. GST input tax credit is very interesting and important one. Why DGGI is undertaking so much of investigation pertaining to GST input tax credit, and they have started, doing this investigation against 30 companies, and 6 companies, they have concluded all investigation and started issuing so-called notices also. And we all know what it is, so-called notices. Department, GST, DGGI investigation department is disputing that this credit is not available to insurance company. Why not available? They are contemplating that insurance company has paid beyond the specified limit towards marketing and sales promotion services. So department is alleging that these are the service not received by insurance company, hence they are denying the credit. Now look at the simplicity of GST, good and simple tax. We all thought that the insurance company, if their outward is taxable, and that too at the rate of 18%, then whatever they're procuring, that will be inward supply. And if they're procuring, that credit should be available. Only dispute which department is alleging in that regard is the consideration which is being paid to insurance agent or insurance intermediaries is beyond the specified limit. And thereby they are disputing that you have given this excess amount towards marketing and sales promotion, hence credit is not available. But that should not be the objective. Objective should be if I'm paying some consideration which has got correlation in the course or furtherance of business, credit should be available. Because the definition of input service and capital goods, if we look at in GST law, Mr. Sethi and to all the participants, it is in the course or furtherance of business. Credit should be available. But nevertheless, this is the first point. But what are the important aspects which I wanted to draw attention for each one of us here? In GST input tax credit, there are two components we need to look at, two categories we need to look at. The first category, when insurance company is issuing a policy to the insured. An insured can be registered recipient, can be unregistered recipient. This is the one aspect of the story. Another aspect of the story would be when insurance company is taking inward supply, certain services, and on that they're paying GST. Either they are paying GST under reverse charge method, which is applicable for insurance agent, individual agent, or insurance intermediary under forward charge method. Credit. So section 17, subsection 5, clause A-B of CGST Act is very important. Let's have clarity for all of us together. This section 17, subsection 5, clause A-B specifically saying that credit not available for general insurance. Please listen first, then I will explain and conclude what is from compliance perspective. Credit, GST credit not available on general insurance, servicing, and repair and maintenance, except when it is available. It is available on motor vehicle, vessel, and aircraft if these three are being used for specified purposes, like further supply, transportation of passengers, training and driving, transportation of goods. When we talk about vessel and aircraft, credit would be available, right? So just take an example and go further. If I'm a company and I've taken motor vehicle for the business of tour and operator. So the question comes, GST paid on motor vehicle, whether credit available to me or not? Answer is yes. Second, if I paid GST on insurance, whether credit available? Definitely credit available. That is how we need to look at the provision. Coming back to the second component of this particular provision, that the credit on general insurance, servicing, and repair and maintenance. Credit would be available to the manufacturer of motor vehicle, vessel, and aircraft. And credit is going to be available to general insurance company as well. So if general insurance company is getting reinsurance done and GST is being charged, then credit is available. And that is what it is being explained with respect to motor vehicle, vessel, and aircraft. Having said that, second point in GST input tax credit is health insurance and life insurance. So look at from company perspective, insured perspective, company perspective. Company has taken health insurance or life insurance for the employee concerned, whether credit is available or not available. And there may be a case that this health and life insurance, when you look at, you're taking these, health insurance and life insurance either for providing the similar business or an element of your composite or mixed supply. That's how we have to look at GST input tax credit when we look at section 17, subsection 5, clause B of CGST Act. Credit available on health and life insurance. If it is for the similar business or an element of composite or mixed supply, or if it is obligatory on employer to provide to the employee concerned, then personal consumption cannot be disputed. If it is obligatory on employer who is a registered recipient, then credit would be available on this premium paid on health and life insurance. Coming back to section 17, subsection 5, clause H. I have seen the presentation which is made by Mr. S.K. Jain. It was very extensive, but 2-3 things which need to have clarity. And I'm giving my input to all of you. Section 17, subsection 5, clause H is talking about credit is not available on goods There's no reference of services. Goods lost, stolen, destroyed, or written off, or disposed of by way of gift or sample. We were discussing the GST implication, remuneration and reward also, right? And we are discussing about the credit component as well. So whenever monetary consideration, which is being paid as remuneration to individual agent, we all know reverse charge method is applicable. And credit should be available and credit is available. When we follow reverse charge, I do not know whether insurance company is complying with the provision or not. Under RCM method, whenever you're procuring from insurance agent who is an individual agent, they're normally not registered. As an insurance company, are you raising self-invoice to yourself? Under section 31, subsection 3, clause F, they're the provision for compliance perspective for RCM liability. And that self-invoice is the eligible document, please bear in your mind, for availing credit along with the payment voucher. So I do not know from compliance perspective, are you doing that or not? When you go back to insurance intermediary, they are not insurance agent strictly in the definition as we have discussed. They are called like corporate agent. That is not under reverse charge method. They are under forward charge method. So forward charge, they are going to charge GST to the insurance company. So whenever any corporate agent who is an insurance intermediary, they are under forward charge method charging GST, then being insurance company, you have to ensure for availing credit. What you have to ensure that such corporate agent are raising proper tax invoice to yourself. Are you having tax invoice copy? Second, receipt of services in your books of account. Third, the insurance intermediary who is a corporate agent filing their GSTR1 on timely basis. So as credit gets auto-populated in your GSTR2B. Effective from 1st January 2022, if corporate agent who is an insurance intermediary not filing one on time, that is not getting auto-populated for you in GSTR2B. Hence, credit may be denied because it is not getting auto-populated in GSTR2B effective from 1st January 2022. Then your such corporate agent must pay the tax liability. They are the supplier in forward charge method. So they must pay the liability. Otherwise, credit is as a condition, you will not get the credit. And being recipient, you should regularly ensure filing your GST return. These are the provision you need to take care of. Apart from that, the 6th restriction which is being prescribed from 1st October 2022 under section 38, which I'm not discussing at length, but telling you, you as the insurance company may be paying RCM liability for individual agent under RCM. You should have self-invoice copy raised to yourself. That is eligible document subject to GST paid in terms of Rule 36(1)(b). And forward charge, you must satisfy the condition of section 16, subsection 2. I was on a point non-monetary consideration. When you're paying non-monetary consideration as a reward, either to your insurance agent or to your corporate agent. When you're paying to insurance individual agent, those are insurance agent, we have to really look at and understand the example well. Let's say you are giving some silver coin. You being an insurance company purchased silver coin from the market and paid the GST. Now you're giving the silver coin either to your insurance agent or to your insurance intermediaries. Then question comes, whatever GST you have paid on silver coin for your business, for your sales promotion, whether credit is available or not. And why I'm supposed to give silver coin to this insurance agent or insurance intermediaries? To boost my market, to promote my sales promotion, to do penetration in my sales volume. That's the reason we put yardstick and give these rewards either to insurance agent or to corporate agent. Question is credit available or not, whether it is a gift. I do not know. Department is disputing. GST department is saying it is gift, but to my mind, it is not a gift. It is subject to satisfaction of milestone for those insurance agent and the corporate agent, then only they are being given. This may be silver coin. There may be some tour, domestic tour, international tour given to them on achievement of their milestone. Can it be said it is given as a gift? To my mind, these rewards are not gift. This is condition. This is subject to satisfaction of milestone as specified. To my mind, credit should be available 100%. Now coming to the other component, like when insurance company is charging premium to the insured, then in that case, there is one component called no claim bonus. Whether this no claim bonus is chargeable to GST, as we know that when your insurance company charging premium to the insured, they are deducting no claim bonus from the premium amount. And for you to have clarity, of course, no claim bonus need to be deducted from the overall premium for the chargeability of GST. But you know what compliances you need to do that? Compliances 1. This figure should be known to the insured before entering into the insurance policy. At the time of raising invoice, you should specifically mention on your tax invoice when you are issuing a policy to the insured. Then only this deduction would be available. Otherwise, from GST law, Schedule 2, Para 5E, they are talking about that this can be considered towards agreeing to do and not to do. But to my mind, this no claim bonus is nothing but a discount in a form of discount given to the insured, and no GST leviable. And circular is being issued in this regard to clarify the same. Coming to the third component, when insurance company is giving claim to the insured, question is chargeability of GST on insurance claim. Whether GST leviable on that insurance claim. To clarify each one of you, that insurance claim is being considered as a actionable claim as per the Supreme Court judgment in the Sunrise. Thereby, this actionable claim, which is the part of Schedule 3 under GST law, specifically excluded neither a supplier of goods nor supplier of services. No GST leviable. No GST leviable. So rest assured, for this insurance claim amount which is being given to the insured, no GST leviable. Coming to the fourth component. Mr. Jan referred about that when, let's say, convince a motor vehicle insurance is being given by your Maharashtra registration, assume Maharashtra registration. And now this particular motor vehicle get damaged or some accident happened in Gujarat. Now, it is going for servicing. So insurance company sending this car under no claim, now getting the servicing done. Now for servicing done, insurance company will pay the money to that service center. So service center going to raise the two invoice, one towards services and one towards supply of parts and component for getting servicing done. Question H, and question which is debated at length. This Gujarat garage or service center, when raising service invoice to the insurance company, quite obvious, to Maharashtra registration, who has given the insurance policy, issued the insurance policy, IGST going to be levied. What about the parts and components which is used at garage service center at Gujarat? Quite obvious, they're going to charge CGST and Gujarat SGST. But how this credit will flow to the Maharashtra registration? That is the big issue in insurance company. But credit is available. Why it is being denied that this credit is not available? To my mind, credit is available. Servicing, repair, maintenance, credit is available when we talk about general insurance company. Only when we look at intrastate and interstate, this dispute is there. Coming to the next component. I've seen at the time of issuance of insurance policy, sometime we receive the money in advance, premium in advance, or park in a deposit account till the time insurance policy gets issued. Or it is being received as an advance towards the insurance policy. Please bear in your mind, if any amount which is received by insurance company parked as deposit, not as an advance, no GST leviable on deposit money. When deposit get appropriated towards the premium, then only GST going to be levied as per time of supply provision. So we have to really look at this time of supply provision. Let's say place of supply. So insurance company need to issue a policy to so many insured, either registered recipient or unregistered recipient. Question comes, what would be the place of supply? Let's say you're a Maharashtra insurance company. You're registered in Maharashtra. Now you are issuing a policy to a Delhi-based company registered in Delhi. Whether transaction would be intrastate or interstate, maybe the particular asset for which this policy is being issued is lying in Maharashtra, but the policy is being issued to Delhi registered recipient. If it is applied CGST and Maharashtra SGST, this credit will not flow to the recipient in Delhi. So to my mind, place of supply again plays important role for seamless flow of credit. GST being one nation, one tax, one market. To my mind, location of recipient would be the place of supply. Hence, IGST going to be levied by Maharashtra Insurance Company and credit is available to the recipient provided conditions are satisfied. I'm just touching one or two more points, then I will conclude because time is also again paused for me. So Mr. Sethi is also looking at me. Bimalji, time is just nearby. I will not take much more, but 2-3 more points I want to touch base here. Now, having said, reinsurance, which is being picked up by Mr. Mani, and then GIFT City and SEZ. Of course, reinsurance pre-GST, the dispute was it is sharing of risk only. How come the reinsurance is going to be chargeable to GST? But we have understand the implication post-GST regime, and somewhat this is settling down. But when we talk about GIFT City, the compliance part. See, yes, when services given by domestic entity to SEZ unit or any insurance company situated in GIFT City for their authorized operation, it is being considered as zero rated. And for zero rated, there are two methods available. I'm talking on compliances. First method, either you can follow a route of IGST. Then you need not require to execute LUT or bond. But in case it is without payment of IGST, whether have you executed LUT? LUT is widely available for zero rated supply. So I do not know, these compliances are becoming a part and parcel of, looking at the GST law. So tomorrow litigation should not come up. I'm just giving food for thought. You may be supplying services, domestic insurance company giving services to a particular unit in GIFT City, SEZ, and you have not executed LUT, letter of undertaking, without IGST, assuming it is zero rated. Without LUT being executed, tomorrow department may come and dispute without having LUT executed. This is not zero rated, and they will ask you for GST component. One important aspect in compliance is that for the insured, whenever he's taking any insurance policy from insurance company, he must include the GST component in overall sum assured. So that whenever he's claiming the amount in case of loss suffered, that GST included in the value will give you the advantage. 17 subsection 5 clause H, we discuss at length, and we discuss what is the meaning of damage, what is the meaning of destruction. Let me tell you one thing. There are two implications. I'm insured, I've taken insurance policy, and it is inclusive of GST. It will always give me advantage. In case of loss, I can also recover my value inclusive of GST. That is a really a good point to understand and note and take it forward. But from a perspective of reversal, in case my goods, let's say, damaged, you have seen Kerala flood in 2020 when we are talking about Kerala cess got levied. In case of damage also, there's one aspect we need to understand. Let's say I got 10 crore rupees, my goods that got damaged or destroyed for either or region. Now, in case of damage or destroyed, when I'm selling these damaged and destroyed goods, let's say for 5 crore rupees, do I require to reverse credit as per 17(5)(h)? To my mind, need not require. Need not require, because what happened, it is not being destroyed fully. As per 17(5)(h), the context, it must be fully damaged or destroyed. If having some value and following the same HSN code under which you are selling at a lower value, there's no provision in GST law for the reversal of credit. coming to the last component. Like insurance companies are getting so many notices. I said SDFC Life got around 942 crore rupees. ICICI Prudential, they got for 492 crore rupees. In GST law, there is two important sections, 73 and 74. 73 issuance of so-called notice for non-fraud cases, 74 issuance of so-called notice for the fraud cases. If credit even wrongly availed or utilized, they have used the term or utilized. There's a provision under section 74 that they may demand penalty to the extent of 100%. Of course, they have got the slap 15% before issuance of so-called notice, 25% within 30 days of so-called notice, 50% within 30 days of the order passed, otherwise 100% penalty. So important aspect is we need to comply GST law when we look at insurance industry as a whole. And there are many factors which we are discussing today. So I'm thankful to Mr. Sethi for giving me this opportunity today to explain compliance's part and creating implication for insurance company and even to the insured. Thank you to each one of you. Thank you very much. Mr. Sethi, you're not audible. Mr. Sethi, you're not audible.
We have Mr. Rajat Bose, and he's sharing with us information on investigations under GST and how to handle GST raids. Because what happens is that CEOs and CFOs and compliance officers and all become very shaky when the raid is conducted. So we have to protect our large insurance industry with 10 lakhs crore premium in a year. So let's listen to Mr. Rajat Bose.
Thank you, Mr. Sethi, and thank you, Mr. Bimal Jain, for that very, very informative discussion. So I have a short presentation. I will share my screen. I hope my screen is visible now.
Yes. I think
Not visible.
just double click on the screen. No, it's still not. Yes, now it is there.
So as we were all discussing a short while back that many notices and investigations have started specifically in the insurance sector. So there are some of these news clippings that I have attached over here where the GST investigation wing has issued notices to various insurance companies where the amount is running into hundreds of crores. So let us first understand what is GST investigation? How does it start? What are you supposed to do when they come at your office and ask you for information, documents, so on and so forth? So an overview of DGGI. DGGI is the primary investigating body under the goods and service tax. It was earlier known as DGCEI, Director General of Central Excise Intelligence. And now after GST has come into picture, it has now changed into Director General of Goods and Service Tax Intelligence. Some of its functions basically are that it develops intelligence specifically in new areas of tax evasion through its intelligence network across the country. It disseminates such information by issuing circulars to sensitize field formations. It organizes operations to unearth evasions of GST and central excise duty. And it keeps a watch over important seizure and investigation cases related to GST. What are the powers of DGGI? DGGI basically, it collects information, collates information, disseminates intelligence relating to evasion of GST. Then it also analyzes various business models, price structures, marketing patterns, which are prone to evasion under GST. It coordinates with other intelligence agencies, including GST departments of states. It investigates offenses which has implications in more than one jurisdiction or commissionerates. And it examines and studies the effect and implementation of various tax concession, exemption, relaxation. And last and most important, it also has the power for adjudication as well as initiating prosecution in certain cases. Now, there are two terms which we need to understand. One is what is a search procedure and what is a seizure procedure. Generally, you will have DGGI officers come to your office and they would say that we want to sort of search the premises. They will have to have an authorization. It can be conducted in a premises where they have a reason to believe. And that reason to believe has to be recorded in writing that there is some kind of evasion or some kind of information, document, etc., which they require for undertaking an investigation. It has to be authorized in a search memo, and the search memo has to be authorized by the jurisdictional joint commissioner or any officer above the rank of a joint commissioner. When there is any transaction which is believed to be in contravention of GST laws, or there is any alleged suppression of information or improper availment of input credit, or any kind of documents is required to be obtained from the company, that is the time when a search is conducted. The books of accounts, statement and records of services which has been provided by the company, input credit statements, audit reports, income tax filings, trial balance, any other computer records which shows whatever business transactions, registration certificates, whatever is available with the company are some of the documents that can be required by the DGGI officers when they come to search your premises. Moving on to the seizure provisions. Now, seizure provisions are more onerous as compared to search. In seizure provisions, they have the power. DGGI has the power to confiscate and seize certain items, equipment, etc., from the company's possession. In certain cases where they feel that there is a threat to the revenue in terms of the fact that if they feel that a company will not is unlikely to pay the GST amount or is likely to sort of shut down its business and cease its operations, then in that case, the GST authorities, to protect the interest of the revenue, can resort to seizure or attachment of the bank account of the company. But this seizure and attachment of bank account has to be specifically permitted in writing by the commissioner. There is a time limit for the seizure and attachment. It cannot, the bank account has to be released, the attachment has to be released at the most within a 1 year period. It can be released before also if you provide sufficient guarantee to the revenue authority that their interest is protected. Then on that representation, the bank account can be defrozen also. Any goods or documents or electronic items is also liable for confiscation and it can be seized also. If any item cannot be seized, the custody can be given to the owner on the undertaking that the identified items will not be removed without permission from the authorities. Any document which is seized from the company and which is not relevant for the purpose of the investigation has to be returned within 30 days of the seizure. And goods which are seized can be released on a provisional basis on furnishing a bond or adequate security or on payment of tax and penalty. So whenever a seizure happens from your premises, you should keep in mind that whatever documents, items, etc. has been seized, there is a proper seizure memo which is prepared. You have to understand that some of the documents may not be relevant, which you can demand within 30 days. And you can also ask them to release on provisional basis whatever goods, etc. has been seized if you furnish a bond or an undertaking stating that these will be made available as and when required for the investigation. The third concept under investigation is a summons. A lot of you would have heard that somebody from the company has been summoned by the DGGI authorities or by the investigating wing of the GST department. Now let us understand what is a summon. Now summon is basically an official document which is issued under section 70 of the GST Act, which requires any person who has been summoned to appear before the proper officer and record their statement pertaining to certain transactions. The person who has been summoned can also be asked to produce certain information and documents at the time of appearance before the proper officer. Summons is a judicial proceedings under the Indian Penal Code, and the process is akin to a civil code as per the Code of Civil Procedure. So when we say it is a judicial proceeding, what does it mean? It basically means that whoever is the person who's been summoned, has to give correct and truthful answers. Because if the person who summoned does not give the correct or truthful answers, then liable for prosecution under the Indian Penal Code. Summon is not same as arrest. Summon is very different than arrest. Summon is only a procedure where somebody is called upon to give a statement and furnish some information and document. Now, attendance to a summon is mandatory. You should not ignore a summons. If summons has been issued to you, you must attend the summons. However, you can also ask for certain adjournments at certain times in case of some extraordinary circumstances. If that person cannot appear before the authority on a particular date, an adjournment can be done. Summon will always indicate whether the person who summoned is a witness or an accused or a co-accused, and what is the purpose of the summon proceedings. So a summon will always contain these details. Now, coming to what things to do when there is a raid in your office by the DGGI. So firstly, you should prepare a standard operating procedure as to how to handle these kind of raids. Because these agencies will often come without informing, and they might come at odd hours. They might come in the evening and then stay till early morning. There have been instances where authorities have come at odd hours also. Even in fact, I have known situations where authorities have come at 8 o'clock or 9 o'clock in the night, and they've done the investigation and whatever they have to do the whole night. So therefore, you need to have an SOP which is maintained, a standard operating procedure as to how to handle these kind of situations. Once they come, you should immediately notify the authorized person who is earmarked for this purpose in the SOP. The single point of contact should be identified for interaction along with parallel legal representation. The document authorizing the raid has to be checked for permission, for DIN number. DIN is a document identification number, etc. If it is not there, if the DIN number is not there, or if there is the permission is not there, then you can politely ask the officers to go back and come back with a proper authorization to conduct the raid. All the communication with the officers, whether it's verbal or otherwise, should be recorded in writing at the time of visit. You must have adequate video and audio recording provisions in the office so that everything is video recorded and there is no chance that there can be any kind of physical violence or any kind of manhandling of staff by the DGGI authorities. Only senior staff members should be present who have adequate knowledge of operation processes and compliances, documentation, etc. The reason is that maybe at a junior level, the people will not be aware of what exactly is happening, how exactly things or transactions move, or what are the GST provisions, so on and so forth. And if that is the case, then it might complicate the situation later on. So only senior staff who are well versed with the operations of the company and how taxation and all these things, documentation compliances are done. Only those people who should know these kind of procedures should be present and talking to the raiding party. You should have some mock drills whenever you have the chance. Have some mock drills at regular intervals to check how the staff is reacting at office whenever there is a raid of DGGI officers. Now, most importantly, what are the things which you should not do when there is a raid by DGGI officers? One is that you should not deviate from your SOP. You follow the SOP. Do not confront the investigating agency or show any irrational, aggressive, or rude behavior. Do not be rude or aggressive with the DGGI officers. They are very unreasonable people. They might come there and be very aggressive or rude with you, but you should always handle things in a calm manner. Do not try and hide any documents or information from the officers. Do not try and contact senior or superior officers of the intelligence agency or anybody in the Ministry of Finance or any other government department while the officers are there. Don't do it while the officers are there. Once they leave, you may contact other officials from the ministry or other senior people if you know. But while the raid is going on, don't try and contact anybody at a higher level. Do not expose very senior company officials like CEOs or CFOs or finance head, or if there are any expatriates working in your organization, don't expose them to the investigating party. The reason is that they might get a bit intimidated or they might get a bit hassled. And also, very senior people like CEO, CFO, they may not be very well aware of the exact working or how things are happening at the ground level. So therefore, it's best that they are shielded for some time, and people who are regularly dealing with compliances or GST issues, those people should interact with the officers. Last and very importantly, never ever try to run away or flee from the office premises in the event of raid, because it optically does not look nice if somebody has run away from the office in case of raids by DGGI. So those were my thoughts on how to handle raids and how to handle investigations. And I will give it over to Mr. Sethi for his concluding remarks.
Thank you to all the experts who have spared their valuable time. And now it's time for questions and answers. But let me thank all of you that we could, what we thought of as a very small thing and all, it turned out to be a session full of knowledge. And my thinking was that in case we are having 58 insurance companies and we are having 12 reinsurance companies come branches operating in India, and there might be many others, and that is, why can't we as PID Chamber of Commerce, Deloitte, Mangaldas Group, A to Z, and that is, we can have, we should have a tendency, that is, we can have a physical one-day conference, or that is in a suitable location. It can be Mumbai, where most of the people are there, that where they should really spend time on this serious thing. And even though all of you have come out with very valuable information, but it is the first time I have heard that is what should be the behavior during raid and all that thing from Rajat. So thank you very much for all of you. So now it is that we have questions. We are slightly off time, that is by few minutes, but if we should pick up the questions and try to answer. The first question is coming from somewhere. It is addressed to Behroz ma'am. Is there a good reference book you recommend reading on the subject matter taxation in general insurance besides the OECD Consumption Tax Trends 2022? So while you answer, and that is, I say that the book which has been written by Mr. S.K. Jain and which I had shown earlier also, that is, this book is first attempt in India by a great person, Mr. S.K. Jain, where he has put all the things, and that is. And this will be, we are ready to send to all the delegates and who will send their postal address. And it will be now for Behroz ma'am to answer the question.
Thank you, Mrs. Yeti. Actually, I couldn't find anything on GST. So I'm not the right person to speak. Maybe the experts who are there on this can share it. If it's income tax also, I don't think there's a separate book for it, but we do have presentations that we've made for income tax on general insurance companies. But I'm not aware of any income tax books also. But on GST, I think the others can contribute.
See, I can recollect that whenever there used to be such knowledge sessions in conferences and all in the world, and then it was that all the information which was shared by the experts and all that thing used to be brought out in the form of a compilation of the proceedings of the conference. So we will make an effort and we will like to bring in whatever information has been discussed and all that thing. And as Insurance Foundation of India and PhD Chamber of Commerce, we would like to bring it out and share it with all the participants and with the other insurance companies also, because they are the ones who are the beneficiary of this one. And because we have been mentioning about notices being served to insurance companies, but some of the insurance intermediaries also have been issued the notices. So they are also in the same boat. And this question is to Mr. S.K. Jain. Can you please guide again why the insurance claim received is not subject to GST, which you explain in your presentation?
This is basically it is as per the law. The GST Act has mentioned that the insurance claim is not subject to tax because it is actionable claim. And when it is actionable claim, Supreme Court had decided that all that the insurance claims are actionable and it is not subject to GST. It is as per Act. It is not that my personal view. It is as per the Act.
Another question to Mr. S.K. Jain is from a law student who is attending. We have been talking about insurance of tangible goods. Can we talk about taxation that are applicable on professional indemnity insurance and on intellectual properties?
No, these the insurances are available and the premium is taxable. Again, any claim arising on these policy that will not be subject to GST. Premium is subject to GST. So policies are available of the professional indemnity, intellectual property. These policies are available. It can be purchased from the insurance company.
This question is to Mr. Mani. Whether the brokerage on reinsurance business is subject to GST. As a reinsurance broker, it receives brokerage on the premium paid by the cedent to the foreign reinsurer, from the reinsurer, whether this brokerage is subject to GST.
Yeah, so I'll take this up. I think Mr. Mani has left. He has another meeting. So GST is payable on the brokerage paid in this case. It will be treated as an import of service.
This might be again a question to Mr. S.K. Jain. Capital goods assumed life of 5 years as per CGST rules is only in case of section 17(1) and 17(2) and not in the case where all the supplies are taxable.
I agree, but what is happening at the time of claim? If there is any claim, the surveyor are insisting and applying the same rules to all the capital goods. This is the problem. And we have to teach the insurance surveyor what to do. It is applicable to 17(1) and 2. But for the others also equipment, the insurance surveyor are applying the same formula. I agree with him.
So we have taken up the question which came up, and now it is that I can make a suggestion or request to Mr. Bimal Jain that because you are very good in organizing conferences. So please work with, we need your guidance and your leadership in organizing an event which is going into the depth of this type of thing. But it has to be a physical event. It has to have, and that is participation from CFOs and compliance officers and person handling the taxation in the insurance companies and reinsurance companies. So you are one of the leading person in PID Chamber of Commerce. So we definitely look towards you for your leadership. So
Mr. Sethi, rest assured, definitely yes. And yes, we can do one-day conference focusing on insurance companies. Multiple point, whatever we did discuss today, we are going to discuss physically and invite all technical experts to deliberate on those topics and clarify all the answers as we are giving through webinar today.
We can assure you that we will be able to bring you the support of Life Insurance Council and General Insurance Council, where all the members from Life Insurance are very much in Life Insurance Council, and all the general insurance, health insurance companies are in General Insurance Council. That is, we will look for their support also, because it is for the benefit of them.
Yes, correct. Yes, correct. And Mr. Sethi, we must do that. Good suggestion. We will plan sometime in July or August.
Yeah. Because what I am finding is that in last 10 days, the people are, even the customers are becoming shaky. That is, and the people have started asking me questions, because we are insurance brokerage firm and all that thing. That is, should we continue to have the policy of HDFC Life? Should we have continue to have the policy of ICICI Prudential? Is it going to be, they talk negative and very negative about these two companies, and they have lost brand value running into thousands of crores in last 3 days. That is, as the news item is appearing here and there. So we have to be very active as a Chamber of Commerce in promoting it, and even inviting the person from GST department, where Mr. Bimal Jan, you and Mr. Rajat Bose, they must be having very good. That is, we will have them also as speakers. That is, so any
Mr. Sethi, just one thing. Just because so-called notice is being issued to HDFC Life or ICICI Prudential does not mean that it is negative. Customer, should not get worried about. These are all interpretation issue, and interpretation issue can happen with any company, not only in insurance company or insurance sector. Any sector you go, you may have interpretation issue. And let me tell you, these so-called notices, when issued to the companies, they are in a position to defend that also. So nothing to worry about that. Just because so-called notice issued and share price dropped, this is all for the timing, temporary, and it should not be considered in a way that we become negative all of a sudden that this company is not good. Negativity should not be there. You should have a reliance on a company for which you have bought the policy.
No, I fully agree with you, but then it is ना कि जो है इज्जत तो बड़े के आदमी की खराब होती है ना, छोटे आदमी की तो होती नहीं है. So I liked the one of the point from Mr. Rajat Bose presentation, that the companies should be having standard operating procedure. That is, and if we have to ask all the 58 insurance companies out it, including that 70 and these reinsurance included, how many of them are having standard operating procedure when raid is conducted? I doubt it will be there. I doubt. Behrose ma'am, please comment on this.
No. I just want to comment to say that it is not just these two insurance companies which are being questioned or investigated. There are several of them. So it's an industry issue. It is not particular to one particular company or one or two companies. It's an industry issue which is there, and many life insurance and general insurance companies have been investigated. So it's not only that. And second thing which I wanted to add was that whenever you do a session, please keep one topic for income tax also, because that also there are a lot of matters which are there for life and general both. So whenever the session happens, it should not only receive a GST, cover income tax also in that.
We will definitely go for that one. And because investigation might be on, or in the case of 13 companies, but those जो बड़ा है उसी का नाम आया है ना न्यूज़पेपर में, because I am in Delhi and I understand what is the thinking process is, that the media people try to bring out such news so that they get more advertisement budget allocated to their publication. That is the way advertising managers of the newspaper and media work. So I pass it on to Babita Madam for formal thanks to the experts. Please.
Thank you, sir. Thank you so much. Indeed, it was a very knowledgeable webinar we have. Very good afternoon to all once again. And on behalf of PhD Chamber of Commerce and Industry, it's indeed a pleasure to propose a vote of thanks to everyone for being with us to attend this important webinars. I would like to convey my deep regards and hearty thanks to all the dignitaries and esteemed speaker with distinct expertise for sharing their valuable information and insight for this important session. The speaker experts, viewpoints, and deliberation in today's webinars have been truly enriching, interesting, and very informative indeed. And I think there were so many things that we have come up, because this is only through the practical knowledge that we share with all. So we get to know many issues which we are trying to sort out in these webinars. And we look forward to such more informative webinars in future, maybe in a same webinar mode or in a, as CTG rightly said, in a physical form. And I once again thank all of you, and especially to our chair of in the indirect tax committee also, Mr. Bimal Jainji, who is especially here, and he has taken out time from such an important schedule and be with us. Everybody from Mr. Rajat Bose, Mr. Rajesh, Mr. Sagar Shah, and Mr. Ma'am Behroz, everybody. Thank you so much for being with us in this webinar and sharing your all knowledgeable thoughts and views on this topic. I once again thank all the eminent speakers and all participants over here, those who are with us. And we would also like to say that any kind of questions, if you still have these participants have few questions, they can write to us, or they can, again, if they wish to see this video, because somebody was asking whether this will be available. This video will be available on YouTube. They can just go again and have a view of this, and then they can write back for any further queries. We look forward for many more webinars. Thank you so much. Thank you, sir. Thank you, ma'am. Thank you so much. Thanks a lot. Thank you, Sethi sir. Thank you for so much expertise, knowledge sharing with us. Thank you. Thank you, Sanjay ji. Thank you so much.